Hi, this is Chuck Oliver. Welcome to this week's Missed Show Minutes. Hidden Wealth Radio, you can find all of our shows archived at hiddenwealthradio.com. But here's what you missed. The market's what some called Freaky Friday with the 300 point excess drop, about 315 points on the Dow. Earlier in the week, the market lost about 400 points in 4 days. And Greece, now that we're a global economy, made markets slide earlier in the week last week with losing itself 13% in that market alone on Tuesday. And the question becomes, is the bull run done? And many of the top wealth managers, some of the top economists have feared now that the Fed is talking about raising interest rates sooner than they had projected instead of into the indefinite future. Now they're reneging on that and suggesting it may happen sooner than what they had projected, which translates into we don't want to spook the market to keep Wall Street happy, so we'll do whatever we can to not really tell you what direction we're going. But I think we've seen the Fed's antics now for going on 6 straight years of forcing people into the stock market by driving interest rates to an artificial low level, that it's very clear what's happening, folks, is the market's petering out. The reality of what's going on around us in Japan, China, and clearly what's happened in European countries such as Greece, etc., are clearly having an impact of what we call the fear gauge, which went up 25% just in one day this past week, which measures volatility in our market. And these economists are very concerned that this volatility is not going to reduce, it's going to increase. And mainly for several reasons, but multiply those reasons with the fact we already have a retirement income crisis because of people not being able to derive as much income from their assets as they could from their employer. And here's where people have the 2 greatest fears in this country around money, and that is running out of it or not having enough of it to sustain their lifestyle. And unfortunately, with what's transpired in the markets just in this last week, it's just made this retirement income gap that much wider. And I want to teach you how to close it. I want to teach you how to have the upside without downside to your serious retirement savings. A client said to me just recently, wow, after I took the time to rethink my thinking and learn how indexing differs from investing, I realized just now how simple it is, and I'm kicking myself that I didn't do this 20, 30 years ago. Folks, here's the opportunity. There is still space available. And whether you're 62 or not 62, I'm going to be teaching you a lot of material from my most recent book, What to Do at 62. So register at whattodoat62.com and do yourself a favor during the holidays when you have a little bit more downtime, and don't delay. It's important. Not only is there still space available, but 10,000 people a day turn 62, and they're in a crisis mode. If you're before 62, now's the time to act to avoid that crisis mode. And then some people are beyond 62 and in a real crisis mode. But regardless of what stage that you're in, maybe you have too much cash on the sidelines. Now you're wondering if it's even worthwhile to get back in. Or ultimately you're somebody that still has some gains that you can lock those in before the market continues to erode, and you're not even sure what to do going forward. I want to teach you how you can have the upside opportunity of your savings being safe when the markets gain, but the downside protection to protect your serious savings when the markets lose, whether it's caused by Greece, Japan, China, a terrorist attack, a national health outbreak like Ebola. Aren't you sick and tired of being sick and tired of not really knowing what direction this market's going to go? Our clients have enjoyed the opportunity of not worrying about what the market ebbs and flows or does or doesn't do because they don't have a downside exposure, at least not to the income that will provide the solution to their retirement income gap that will protect them for their entire lifetime as well as their surviving spouse. And I want to teach you, here's what you'll learn. In fact, as a holiday gift, I want to gift you that book by registering and attending, but I also want to gift you the opportunity to solve as a free analysis your retirement income gap. What's the reality of being able to retire, how soon and with how much, and what's the void that will likely be needed to be solved for that'll get you not just to retirement, but it'll get you through retirement. So that's one thing I want to gift you, and just as a way to say thanks around these holidays. If you're max funding your 401k, this is out of the Wall Street Journal this week. If you're max funding your 401k, for those of you still working, or maybe max funding your IRAs and relying on Social Security, you may see as much as a 70% decline. Now listen, a reduction to your current lifestyle as it is today. Folks, our clients pay more tax in retirement than they did when they were working. And because we've been able to show them how to solve their retirement income gap to not lose, but also to not lose not just to the market, but not to taxes, they're protected. And they have the lifestyle that they want. And you can too. What to do at 62.com. What to do at 62.com. Here's to your hidden wealth.